Welcome to our deep dive into Bitcoin.
Yeah,
It's this digital currency that's kind of shaking up global finance.
it really is.
And we're going to try to uncover its story from
Mm.
its mysterious origins
Yeah,
to the current trends shaping its future.
right.
And we want to talk about why it matters to you.
Absolute.
We've got a pretty fascinating mix of sources for this deep dive.
Oh, yeah.
We've got academic papers, financial analyses, historical accounts, and even some philosophical perspectives.
I like it. I like the variety.
Yeah, it's going to be fun.
Sounds good.
So when we talk about Bitcoin,
Yeah.
what's interesting to you about it?
Well, I think what's really interesting about Bitcoin is how it sort of challenges the foundations of our traditional financial systems.
Right.
But it exists entirely online.
Yeah, and you wouldn't think that something that's completely virtual
Right.
could have such a real-world
Yeah,
impact.
exactly. Exactly.
So let's start with Bitcoin's genesis. A lot of our sources point to a fascinating connection between its emergence and a really secretive meeting on Jekyll Island back in 1910.
Oh, yeah, that's right. Yeah, so this meeting was really pivotal, I think, in shaping the financial landscape that we see today.
Gotcha.
So you had this group of really powerful American financiers, including Senator Nelson Aldrich
Right.
and Paul Warburg.
Okay.
They met in secret to kind of draft this blueprint for what we know now as the Federal Reserve System. This gathering was, shrouded in secrecy,
Yeah.
and it really did centralize financial power in the United States.
It's interesting.
And I think that's why a lot of people think of it as leading to a lot of concerns about transparency and control that kind of fueled the desire for alternative systems like Bitcoin.
So you're saying that Bitcoin is like a reaction to
Yeah, like a direct response.
this concentration of power.
Yeah, precisely.
Okay.
Yeah.
That's really interesting.
And it's interesting how Bitcoin's decentralized nature,
Yeah.
where transactions are recorded on this publicly distributed ledger called the blockchain,
Right.
offers just like a stark contrast to that.
Yeah, to the centralized control.
Exactly.
That makes a lot of sense.
Right.
It's amazing how a historical event like that, the Jekyll Island meeting,
Yeah.
can have this ripple effect
Huge ripple effect.
on the future of finance.
Yeah, absolutely.
It really highlights how our financial systems are constantly evolving.
Always, always.
Each era brings new challenges and responses.
Right.
It seems like Bitcoin is sort of a continuation of this evolution.
Yeah, I think so.
It's like a digital response
Yes.
to all these inherent limitations and concerns about this centralized financial power.
Yeah, exactly.
So this brings us to the current trends surrounding Bitcoin.
Okay.
And
Yeah.
one thing that immediately stands out to me is its price volatility.
No, absolutely.
It seems like a total roller coaster ride.
Huge swings, yeah.
So what drives these wild swings?
I think the key lies in this concept of intrinsic value.
Okay.
Unlike assets like gold,
Right.
which have inherent worth due to their properties and their uses, Bitcoin lacks this inherent value.
Oh, interesting.
So its worth is derived purely from market perception, what people believe it's worth at any given time.
Gotcha.
You see? And this reliance on belief and market dynamics makes it susceptible to these massive fluctuations.
So it's like this self-fulfilling prophecy.
Exactly.
If people believe it's valuable,
Yeah.
it becomes valuable.
Right.
But that belief can shift quickly.
Oh, in a heartbeat.
Wow.
Yeah. So our sources highlight the risks
Okay.
associated with this lack of intrinsic value.
Yeah.
They even draw parallels to historical events like the 1929 stock market crash,
Oh, wow.
which was partly triggered by the Federal Reserve's manipulation of interest rates and gold reserves.
That's scary.
Yeah, so it raises this important question about Bitcoin's susceptibility to manipulation.
That's a sobering thought.
It is.
So how do people who believe in Bitcoin's future
Yeah.
reconcile this volatility with their optimism?
Well, they point to Bitcoin's underlying strength,
Okay.
its robust and decentralized network.
Right.
Take, for example, BitPay's reported 110% transaction growth
Oh,
in the year leading up to 2016.
okay.
This indicates growing adoption and trust in the system.
That's a really impressive growth rate.
It is.
So even with all the price fluctuations, the network itself is showing strength.
Precisely.
That's really interesting.
Bitcoin's decentralized architecture,
Right.
where transactions are validated,
Yeah.
and recorded by this distributed network of computers
Right.
makes it resilient to things like censorship, fraud, and single points of failure.
That makes sense.
Unlike centralized systems, which are vulnerable to attacks on their central nodes, right? Bitcoin's network operates more like a spider web. Even if one part is disrupted, the overall structure remains intact.
So it's a trade-off.
I think so.
Price volatility in exchange for a potentially more secure and resilient system.
Yeah, that's one way to look at it.
Okay, that's a good point.
However, we can't overlook the elephant in the room.
What's that?
Bitcoin's energy consumption.
Right.
The computational power required to maintain that blockchain, specifically the process of mining Bitcoin, is a significant concern.
You're right. We hear a lot about this in the news.
Yeah, it's a big deal.
Can you explain why Bitcoin requires so much energy?
Sure. The energy usage stems from the proof-of-work mechanism that's used to secure the network.
Right.
So miners compete to solve complex mathematical problems.
Right.
And the first one to solve the problem adds the next block of transactions to the blockchain.
Oh.
This process requires massive computational power. And as the network grows and more miners participate, the energy consumption just increases.
So the very thing that makes Bitcoin secure and decentralized, its distributed network, a proof-of-work mechanism, is also what makes it energy intensive.
Exactly.
Okay, so this has sparked a lot of debate.
Oh, yeah, big time.
About the long-term sustainability of Bitcoin.
Of course.
Especially as concerns about climate change intensify.
For sure.
So we see both strengths and weaknesses in this network. Where does this leave us?
Well,
what are the broader implications of this technology?
I think that's where things get really interesting.
Okay.
You know, Bitcoin, for all its complexities and contradictions, is forcing us to rethink these fundamental aspects of finance and technology.
Let's dive into those implications right after this.
Yeah.
Okay, so we're diving into Bitcoin today. You've given us, wow, a lot to work with here. Academic papers, historical analyses, even some...
real-world examples?
Yeah, real-world examples of financial kind of upheaval and crashes. And
it's a fascinating area.
Yeah, so we're going to go beyond the tech, right? Get to the context. So we'll trace Bitcoin's journey, kind of from that fringe idea to, like, this global thing that it is now.
Global phenomenon.
Yeah. And hopefully you'll walk away, listener, knowing how to spot those red flags, the crypto red flag.
Absolutely. It's a story full of, as you said, intrigue and
cautionary tales.
Yeah, cautionary tales. You're going to look at those.
For sure. So let's start with that mystery, right at the heart of it all. Satoshi Nakamoto, this person, or maybe it's a group, we don't know, created Bitcoin, but their real identity, total secret.
To this day, still a secret, and it's fueled endless speculation. You know?
Yeah, who is it?
What we do know is that this anonymity, it's been very carefully maintained. And that's had a huge effect on how Bitcoin's developed, even how people see it.
It's almost like an urban legends, right?
Yeah.
Very real.
Yeah.
But it's real. Did Satoshi want to stay hidden to protect themselves? Or was there, a bigger plan?
Some argue that secrecy was crucial for Bitcoin to thrive, outside the control of governments, banks, the whole system.
Right, right.
Without a leader, a figurehead, it could be truly decentralized, belonging to everyone and no one.
But that also, doesn't it, breed distrust? Especially with all the scams and fraud we see. If you don't even know who's behind it, how can you trust it?
It's a valid concern. And you've pointed out some really key examples, the Ponzi schemes, right? Preying on people who just want to get rich quick.
Yeah. They promise these crazy returns.
Unrealistic returns, luring people in.
With this illusion of easy money.
Exactly. And they exploit the complexity of it all, right?
Yeah, cryptocurrency. It's hard to understand.
Absolutely. Take BitConnect. That was a few years back. Promised daily returns through their lending platform and their own coin, BCC.
Oh, I remember that.
They even had these huge conferences, right?
Making you look legit.
Legitimate, yeah. But it was all a facade, a show.
So how did it all fall apart?
Well, the returns, they weren't actually coming from any real business.
Oh, man.
They were just paying early investors with money from the new people joining.
Classic Ponzi.
Classic Ponzi. And when regulators started cracking down, people asking questions, it all just collapsed.
It's like that reminder that easy money usually has a hidden cost.
Yeah.
And with Bitcoin's founder, a ghost, who do you even blame?
Right. There's no central authority, no one to hold accountable. And that's something every investor, especially casual ones, needs to really be aware of.
Especially with how volatile crypto is. One tweet, one news story, and prices go crazy, up or down. Perfect for speculation manipulation.
You mentioned the DAO hack 2016.
Oh, yeah.
This decentralized autonomous organization built on Ethereum.
It was supposed to revolutionize investing.
Right. But a flaw in the code, and boom, $50 million gone.
It's scary. Even decentralized systems, they're not perfect. Yeah, it's the minefield out there. Scams everywhere you look.
Especially with, so much hidden, thanks to Bitcoin's mysterious origins. It's like trying to solve a puzzle, but you're missing half the pieces.
So, okay, what can casual investors do to, protect themselves in this crazy world?
Well, education is key, right? You got to go beyond the hype, really understand how it all works. The technology, the market, the rules or lack thereof. You've got some good resources in here about blockchain and what makes Bitcoin's price go up and down.
So it's like learn the rules of the game before you play.
Exactly. And just as important, be skeptical. Don't believe everything you read, especially online. Those crypto gurus.
Yeah, they're everywhere.
Do your own research. Check multiple sources. And never, ever invest more than you can afford to lose. If something sounds too good to be true, it probably is. High returns, high risk. And in crypto, those risks are, they're amplified by the lack of rules, transparency.
Speaking of rules, it's interesting to see how governments are trying to catch up with this whole crypto thing. You had some articles about regulations, and it seems like they're struggling between encouraging innovation, but also protecting people.
Yeah, there's definitely tension there. Some say strict rules will kill innovation, go against the whole idea of Bitcoin being decentralized. Others say, hey, we need more oversight to stop the illegal stuff, protect consumers.
It's a tough balance. It'll be interesting to see how it all plays out.
For sure. But for now, investors need to know crypto is largely unregulated, so be extra careful, do your homework.
So let's talk about specific red flags. What should people watch out for?
Well, we talked about Ponzi schemes. They're always around. They use flashy websites, promise guaranteed returns, these pyramid structures.
You also mentioned pump and dumps, where people artificially pump up a coin's price.
Right. Spread false info, create hype. They might use social media, forums, even fake news sites. Get people excited, price goes up, they sell, and everyone else is left with, nothing.
It's like a game of musical chairs. Someone's always left standing when the music stops.
Exactly. And then you have fake ICOs, initial coin offerings, supposed to be for new projects to raise money. But scammers create fake ones with stolen documents, fake team members, empty promises.
So you really got to vet any ICO before putting money in.
Oh, absolutely. Unrealistic promises, anonymous team, no clear plan for the project. Those are all huge red flags.
You said even choosing an exchange can be risky. Some get hacked or scams themselves.
Right. Choose a reputable exchange, strong security, proven track record. Ask them about their security practices, how they protect your money. Don't be afraid to ask tough questions.
And again, with Bitcoin's founder, a ghost, if something goes wrong, who do you even track down?
It's almost impossible. No central authority, no clear trail. It's like chasing a ghost through a maze.
So the risks they're definitely amplified in crypto. Casual investors, be extra careful out there. But let's flip this for a second. What's the good side? Why are people drawn to crypto in the first place?
Well, Bitcoin offers a level of control you don't get with regular money. It's not controlled by governments, central banks.
Which appeals to some people, for sure, those who distrust the system or live in places with unstable economies.
Exactly. And Bitcoin has a limited supply. Only 21 million will ever exist. So some see it as protection against inflation, unlike, dollars, euros, whatever, that can just be printed endlessly.
You mentioned that Bitcoin transactions are offering some privacy, which you don't get with banks.
Yeah, transactions are recorded on the blockchain, but not directly linked to your identity.
But that privacy isn't perfect, right?
True. Law enforcement has ways to track things if they need to.
And users need to know that.
Yeah.
That it's not, totally anonymous.
Right. It's complicated.
So Bitcoin, crypto in general, it's a mix. Potential benefits and real risks. And each person has to decide, is it worth it for them?
That's a great way to put it. It's a complex, ever-changing world. Requires a thoughtful approach.
Okay, before we wrap up, I want to go back a bit. You brought up some historical parallels in your research.
I think it's important to see how Bitcoin fits into the bigger picture of financial history.
Let's start with like speculative bubbles. You compared it to things like the tulip mania back in the 1600s and the dot-com bubble in the 90s. What do you see as the common threads?
Well, one thing that stands out is new technology and this belief that it's going to change the world. And during those times, people get caught up in the hype and they forget the basics.
This time it's different thinking.
Yeah.
It's like history keeps repeating itself. New invention, everyone gets excited, then things crash down.
Yeah, it's like we forget. Every generation thinks this is the big one, the secret to getting rich. But human nature, how markets work, it kind of follows the same patterns.
You mentioned the dot-com bubble. Internet companies barely making money, but valued at like billions. It feels like some of these crypto projects now promising the world, but how are they actually going to make money?
The parallels are definitely there. And both times the bubble burst, investors lost a lot. It shows just because something's new and cool doesn't mean it's going to be a financial success long term.
So if we want to avoid repeating those mistakes with Bitcoin, with crypto,
Yeah.
what can we do up?
That's the big question, isn't it? I think a key part is more transparency, more accountability in the whole crypto market. Exchanges need better security, know who their customers are, stop money laundering.
So we need rules, but rules that don't stifle the good stuff, encourage innovation, but also, protect people.
Exactly. A clear rules, a level playing field, stop the bad guys. Because it does have potential.
And we need to educate people about the risks. It's not just about, oh, I could get rich quick. It's understand how it works, the market, what could go wrong.
It's about giving people the knowledge to make good decisions
Mm-hmm.
based on, reality, not hype.
So where do we go from here? What's the future of Bitcoin of all this?
If I knew that, I'd be a very rich man. But what I do know is technology itself isn't good or bad. It's a tool. And like any tool, you can use it to build or to destroy.
You talked about Bitcoin's potential for a fairer financial system, giving power to individuals, less reliance on banks, governments. But you also warned about the downsides, the anonymity, the scams.
It's a double-edged sword, for sure. The very things that make Bitcoin attractive, the decentralization, the mystery, also make it easy to exploit.
So the story isn't over yet.
Not even close. And we're all writing it, in a way. Whether we embrace Bitcoin, ignore it, try to regulate it, our choices will shape what it becomes and how it affects society.
Well, that's a lot to think about. I think we've reached the end of our deep dive into Bitcoin. I hope our listener has learned a lot and gotten a better grasp of this whole world. It's complex. It's always changing.
For sure.
Remember, listener, knowledge is power. And with crypto, where you can win big or lose it all so quickly, be informed, be careful, and always think critically.
Couldn't have said it better myself. Until next time,
Yeah.
happy exploring.